0.37 billion naira. Plus, Nigeria's rail sector in focus has correspondent looks at some of the developments in the year ended. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Good to have you join us at this time. It's that time we talk business. I'll start by telling you that the Nigerian National Petroleum Company, NNPC Limited, is assuring the public that there is no imminent increase in the cost of premium motor spirit, commonly known as petrol. NNPC Limited urges Nigerians to disregard what it calls unfounded rumors and assures that there is no plans for an upward review of the petrol price. A statement by Chief Corporate Communications Officer NNPC Limited, Olufemi Sone, advises motorists nationwide against engaging in panic buying, reiterating that there is presently ample availability of PMS across the country. Now, the Naira experienced a significant decline on Wednesday, January 3rd, 2024, closing at 1,035 Naira 12 kobo per dollar in the official market. This represents a notable depreciation of 4.72% compared to previous closing, raising concerns about the currency's trajectory just 3 days into the new year. This latest depreciation marks the third time the Naira has breached the 1,000 to a dollar threshold, highlighting a persistent trend of weakness. We now take a look at the official exchange rate of the Naira. And still talking currency, the Central Bank of Nigeria has expanded on its decision to reverse a cryptocurrency ban on financial service providers, providing clear rules to oversee operations moving forward. The Apex Bank announced stringent rules for banks as it turns away from the initial crypto ban towards regulation for virtual asset service providers. According to the CBN, operators like crypto exchanges and digital asset brokers can only open Naira-dominated bank accounts. It also said cash withdrawals are prohibited and companies cannot clear third-party checks via their crypto accounts. Other withdrawal types will be limited to 2 per quarter as well. And on the stock market, investors gained 846.37 billion naira as the all-share index advanced 2.04% on Wednesday, the highest in the new year. The market closed higher by 1,546.69 basis points, as the market capitalization also recorded a gain of 846.37 billion naira. The total volume traded advanced by 79.83% to close at 927.56 million naira, valued at 10.69 billion naira, and traded in 11,629 deals. Fidelity Bank was the most traded stock for volume with 108.1 million, while UBA was the most traded stock by value with 1.54 billion naira units traded. And in the last 5 trading days spanning from December 27th, 2023 to January 3rd, which was yesterday in 2024, equities listed on the Nigerian Exchange Group surged by approximately 2.063 trillion naira in these 5 trading days. And the market hit new highs on 4 occasions. This upward trend continued and posted closing figure of 77,537.57 basis points on Wednesday, January 3rd. What are the push factors and what does this mean for the capital market and for investors? These and more questions will be answered by our guest, Aruna Kebira. He is the MD CEO of Global View Capital Limited. He joins us from Lagos. Mr. Kebira, it's good to have you join us on the program, and once more, Happy New Year to you. Hello, Mr. Kebira, if you can hear me, it's nice having you join us at this particular point in time, and Happy New Year. Okay, it seems we are yet to establish a contact with Mr. Kebira, but we'll get to continue the conversation on how the capital market is doing. At this point, let's now move over to the global market where Bosede is waiting. Hello, Mr. Kebira.
Yeah, good morning. It's my pleasure to be on this program this morning.
Okay, great. We're talking about the capital market and how much it has surged in the new year, starting from ending of December to this early days in January. You will agree with me that the market has been highly bullish from actually December 2023 till the first 2 days, possibly to the third day as of yesterday, where we had a record of 2.04%. Can you tell us what this push means? What are the factors responsible for this?
Yeah, in our local stance, we call it that the market is actually on steroids. And if you look at the market started this movement from May 29th. After the incumbent president made a statement, and the market has actually been looking up. And during the year, there's this capitalization agenda that was released by the CBN. I think it's one of the reasons why we can see serious movement in the banking sector. And if you look at the market, the most liquid stocks are the banking stocks, and the moment the banking stock is upward looking, then it means that the market is good. And we understand that for every good market, all stocks should be good. That is why you see that as low as the Deep Capital, as low as Oman Tech, as low as that communication, they are also looking up. The market is good, and the number of people are beginning to have this fear at the back of their mind that will there not be a crash, something that we experienced maybe between 2004 and 2010. But I don't think I have that one at the back of my mind, because a lot of things have actually changed. And if you look at it, we have increased local participation, which was not there as at that time. And also understand that PFA were not in the market at the time that the market crashed. And there is better regulation. And in fact, I'm even thinking that the 7,000, the Osher Index has touched that it has the ability before when we begin to see the release of results, we go to come out with go to increase more than that as at the time we begin to see dividend declaration in the market.
Okay, great. You mentioned some of the reforms as responsible, though every beginning of year and also ending of year, if I'm right, in the last 2, 3 years, we have seen this positive impact at the close of the market in the year ended, and in the year beginning, we see this growth trajectory. Like you said, yes, in 2004 down to 2010, there was a crash, but you're not expecting that this time around, owing to the reforms that are ongoing. Now, with the mere mention of increased capitalization for Nigerian banks by the CBN, you're already seeing the market responding to it, even before the capitalization, which you have attributed to the progress we are experiencing with the banking stocks. What other stocks should we be looking out for in the new year?
Yeah, during the 2023, there were information that filtered into the market. One, we were told that Dangote Group, Dangote Sugar, and National Salt Company, which is NASCOM, and Dangote Rice are going to do business combination to be listed back as Dangote Food. And that is still ongoing. I believe that what they are waiting for is regulatory approval. That is on one side. There was also a news during the year that Japan Gold, they were Japan Oil and Services, now Japan Gold, they are into gold exploration. There was this private placement that was supposed to be consummated at 250 kobo. That is still ongoing. And if you look at Dangote Sugar just moved only yesterday to, I think, about 63 naira thereabout. And Japan is still trading 180 kobo, but it's still far away from the 250 kobo private placement that is in the offering. And there is this also business combination involving Unity. Apart from that, like I said, I've still not believed that most of the banking stock has gotten to their zenith, especially the lower one, the Unity Bank, the Stanley Bank, and Fidelity and FCMB. Yes, GTCO may have been about 40, Zenith about 40, but I believe that FCMB, Fidelity, Dangote Sugar, and NASCOM, we actually perform, at least between now and the middle of the year.
Okay, now, it's a new year. Should we expect new listings in the new quarter?
Yes, in fact, I will give it to the management of the NGX who have done everything possible to make sure that we begin to see new listings. We saw Mikio before the year folded off to 2023 folded. I believe there are some that are in the offering that we might not actually be privy that will be privy to. It is when it is right to be listed that we will know. But I believe that there will be listings between for this first quarter of 2024.
A particular share, well, let me start from the fact that the oil and gas sector is doing a whole lot. There are a lot of reforms, and we are seeing a production increase. Nigeria's OPEC quota is also being increased, and the government is also promising us 2,000 barrels per day. One stock that Nigerians are looking forward to listing is the NNPC. Are you also looking forward to that?
Of course. In fact, the market is seriously waiting for its arrival, and because with one, it's going to deepen the market and it's going to increase the capitalization. The market is expecting it.
Okay, talking about capitalization, you've also mentioned earlier on that we have domestic investments coming in. Should we also look out for foreign direct investment, talking about increased portfolio in the market to increase our capitalization, maybe for us to be at par with countries like South Africa and the rest?
Yes, there would be, but the only thing that I've said is that I think there has been an increase in local participation, which is different from what was. Yes, if they come in, the problem is that it will be skewed. The participation is skewed towards a local participation, but it is no longer the way it used to be. Definitely, a Nigerian market is a performing market, and any designing investor who want to come and position at least made that 2024. But I think the only problem that they have is this to repatriate the dollars. I think is the FX that is active, that have been the problem. I believe that by the time this this current government moves to sanitize the FX market, we are going to see an increase in foreign participation, but not that it will not swallow the local participation. Yes, they will come, but it's not like what happened between 2004 and 2009.
Okay, talking about repatriation of dollar to be made easier as government has promised, at what point can an investor have access to dividends, and can such an investor pull out his investment completely at any point in time?
Having have access to dividend, I don't think that is a problem because it's a function of the registrar to make the dividend available to you. I think it's just the repatriation of the money that is where the problem, which has to do with forex, which I might not be disposed to be able to talk much about it.
Okay, at this point, what advice will you give for investors going into the new year?
Yes, like I said, the way the markets work, the market is very dynamic. A number of people who have taken position at lower prices will want to take profit. And if you look at the figure you have just read out, you can see the volume that was traded in Fidelity, the volume that was traded in Transcorp. It is those that have taken position at lower prices that are taking their profit. But the market is strong. It is strong enough that the buy force will be able to consume the sales force, and the prices will begin to still look forward. I would advise any new entrants to put their focus on fundamentally sound stocks, because in a situation like this, there are stocks that even when the market is reversed, when profit have been taken, there are stocks that can actually not be so affected. Again, I would also want new entrants to concentrate on those that have paid dividend over time, especially when that growth their dividend payout, like the Zenith, like the GTCO, that even when you miss price appreciation, you will not miss a dividend payment, because this is the earnings season. In a little while, we're going to see a result in the market, because if you look at the website of the NGS, you are beginning to see notices of close period and board meetings, which is an indication that we begin to see results. And this result that we are seeing is Q4 2023, and it will be attended by declaration of dividends.
Thank you very much, Aruna Kebira, CEO Global View Capital Limited, for giving us insight into the market, and those investment tips are actually useful. Thank you for this moment.
Thank you for having me. My pleasure.
You're welcome. We now move over to the global market, where Bosede Abel is standing by with a review of activities. Hello, Bosede. It's over to you.
Hello, Benny. Hello and welcome to the Global Market Review. Investors await data Thursday on inflation in France and Germany, as well as a series of purchasing managers' index figures. Stateside releases are due on initial jobless claims and private payrolls. Meanwhile, European stocks are heading for a mixed open Thursday amid uncertainty among global markets over the trajectory for central bank rate cuts. DAX and CAC 40 are unchanged, while FTSE dipped 0.51%. China led losses as on Thursday, followed by Japan stocks, which resumed trading after an extended New Year's holiday, during which the country witnessed an earthquake and an accident involving Japan Airlines. However, Nikkei dipped 0.53% at 33,288.29. The Shanghai Composite also dropped 0.43% at 2,954.35, while the Hang Seng Index topped 0.04% across 16,652.25. U.S. stock futures were little change Wednesday night after the Nasdaq Composite fell for a fourth straight trading day. The Dow Jones Industrial Average topped 54 points. The S&P 500 0.18%, and Nasdaq Composite is also on the rise at 0.23%. Africa stocks are resuming Thursday's trading mixed with high expectation from investors. South Africa opened positive while Namibia's overall index is negative. That's the global market review this morning. Back to you, Benny.
Thank you, Bosede, for that update. And the Manufacturers Association of Nigeria has urged the federal government to overhaul the country's power sector and prioritize forex and credit allocation to manufacturers to drive growth in the country's industrial sector. The association said this in its manufacturing sector outlook for 2024, adding that these measures will go a long way in greatly improving the sector's performance in the new year. It added that the government should prioritize forex and credit allocation to the manufacturers and reduce the number of BDCs into large and well-established operators to cap their excesses and untoward operations through effective management and supervision. The association advised that the federal government expends cost saved from fuel subsidy to deploy production-focused policies backed with more structural measures to combat the peculiar inflationary pressures from insecurity, energy, and transport cost. And now oil prices rose on Thursday, adding to solid gains in the previous session on persistent concerns over Middle Eastern supply following disruptions at the field in Libya and heightened tension around the Israel-Gaza war. Brent crude rose 36 cents to $78.63 a barrel, while U.S. West Texas Intermediate crude futures rose 52 cents to $73.22. Both benchmarks rose by around 3% to settle higher for the first time in 5 days on Wednesday, with WTI seeing the biggest daily percentage gain since mid-November. On that note, we now see prices of oil and other commodities on the global market. Now, there has been major developments in Nigeria's rail sector in 2023, which has actually shaped events that would be unfolding in the transport sector in 2024. Larry Egbeleyi takes a look at some of these developments in the year ended.
Developments come into play in the nation's railway sector might bring back the good old days in terms of contributing to economic growth. What then are these major events? In 2023, the Railway Constitution was amended, moving it away from exclusive legislative list to concurrent list, allowing for the creation of state lines, in which Lagos State has already taken advantage of this with its Blue Rail line. One of Portugal's largest construction company, Mota Engil, with a stake in China's Communication Commission, signed a 1.48 billion euros railway infrastructure project in Nigeria, which will aid Kano-Maradi rail construction. The beginning of rail freight service hauling cargoes from Apapa Port to Ibadan has already commenced. The rail manager is upbeat about these freight lines in 2024 as demand is on steady increase since it started.
2024, we are looking forward to increasing the number of freight trains we are running to Ibadan and to Mobolaji Johnson here, because we are in the season of moving export and import.
He also mentioned other areas of improvement that will be implemented in 2024.
The passenger train, like just in the late quarter of 2023, we introduced the Apapa Kajola train on a standard gauge, moving from Apapa to Kajola. In 2024, we are looking forward to more patronage, increasing the number of passenger trains we are going to run from Lagos to Ibadan.
In terms of enhancing passengers' traveling experience services, some areas of improvement were identified.
We should equally look at how we can, in a way, bring in some sort of, passenger railway interactive outlook, whereby they can be getting feedback directly from passengers.
E-ticketing, it's a new addition in 2023, where passengers can book reservations online. The rail manager said the process of e-ticketing will be perfected in 2024 and use the opportunity to call the attention of the public to areas of concern. Optimism is the feeling amongst Nigerians and nation's railway for 2024, since the work seems to be clearly cut out for them to follow through. In Lagos, Larry Bilayi.
This is where we end this edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. Business Express returns tomorrow Friday at 3 p.m. I am Benny Adams saying, God bless Nigeria.